Wall Street reopens this morning after its worst Christmas Eve losses ever. The Dow Jones Industrials fell 653 points on Monday, hitting their lowest level of the year. U.S. stock values have fallen by $1 trillion this month. They're on track for their worst December performance since the Great Depression. Joseph Saluzzi, co-founder of Themis Trading, is here to help us understand why the markets are dropping. Joe, good morning.
Thanks for having me. Morning.
So we saw on Sunday that Treasury Secretary Steve Mnuchin called the largest banks tried to shore up confidence in the U.S. markets, and President Trump blamed the Fed for the problems. What role have those two things had in the drop we've seen?
I think Monday's sell-off was certainly related to Mnuchin comments because they were not necessary. You know, you don't make a call like that, in my opinion, when there's not a financial crisis going on. And right now, there is not a crisis. 2008 was a crisis. So making a call looking for liquidity and asking banks for liquidity wasn't necessary. And what it did has the opposite effect, where people started to wonder, is there something we don't know? And that's always the biggest fear, certainly that I have, is there something out there.
So, Joe, do you think that his call to the banks was a thinly veiled attempt to assure the public that the banks are strong, the market is okay? Or do you think there was some fundamental reason he really wanted to take their temperature?
Yeah, I think the former. I think he was trying to assure the public. I think he was trying to say, you know, let's make sure everything's good. Let's get the markets back up. But you know what? That's not his role in that situation. We're not in a crisis where you have to call the banks and look for liquidity like Secretary Paulson did back in 2008, which was a much different story.
It's a little bit odd as a call. It's like calling your parents and saying, do you have emergency rations and water in the house? Everything's fine, but I just want to be sure.
Right, and when you get that call, you're worried, right?
Yeah, what are you talking about? I haven't given it any thought.
Right.
And this is the funny thing about the market. When we do the weather report, what we say doesn't affect the weather, but when we talk about the economy, what we say does affect the economy. Now, the market and the economy, two different things.
Right.
Is this drop in the stock market a bad omen for the broader economy?
I don't think so. I think actually just last night there was a report that retail sales are coming out 5% higher this year. So the economy is strong. And the reason why I know that is the Federal Reserve they know what they're doing, okay? Well, this time I think they do. I think Bernanke's guys, it was a different story. But they're raising rates because they see a strong economy, which means, and you see a 5% retail number. So the markets are built a lot on the economy, but also on confidence. And what we have right now is a confidence crisis. Things like, you know, questioning the Federal Reserve and the Mnuchin comments, those are not helpful. Let's talk about low unemployment, rising retail sales. You know, there's a lot of good things. The tax cuts actually are going to kick in, and they've been kicking in. That's a good thing for the economy. They're strong. Company earnings are great still.
We are right now, though, in a government shutdown, day 4 of that. The impact that may have is what?
I don't think, you know, we've seen these. I've been around for a long time, unfortunately, and we've seen a lot of temporary shutdowns. And for the most part, markets just kind of ignore the shutdown. It's not a big deal for the markets.
How long does it have to last for it to have an impact? You
know, if it goes on for a month or something like that. I think we've seen weeks or like that, and those aren't tend to be a big deal. But, you know, we're more concerned about, you know, the general economic, you know, where the unemployment numbers, where the industrial production, all of those solid numbers that have been coming out, and they're still good.
Right. Let's cut to the chase with our money. I mean, if people have $1,000 in the market at the beginning of the year, right now they've got what, 850 left?
Yeah.
How do they protect what's remaining?
At the beginning of the month, actually, we're down 15% on the month. But I would say don't panic. Certainly don't panic. And you know, if you look at your statements, and they're going to be lower, okay. But at this point, if you see this as the way I see it, as a strong economy and a confidence issue that I think we'll get through, then look at it as a buying opportunity for long-term investors. For instance, I have a 529 for one of my kids. I added money on Friday because I think at this point we're getting towards you know, we're not going to say you wanted to put $5,000 in the market, put $1,000 in right now, and then work your way through and let's see where this thing goes. But right now, don't panic.
Joe Saluzzi, you're going to loan me that $1,000? We'll talk in the commercial break. Thank you very much.